Ladies and gentlemen, good day and welcome to Q3 and 9 months FY24 earnings conference call of PI Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddharth Rangnekar from CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, and thank you for joining us today on PI Industries Q3 9M FY24 earnings conference call. Today, we have with us senior members of the management, including Mr. Mayank Singhal, Executive Vice Chairman and Managing Director, Mr. Rajnish Sarna, Joint Managing Director, Mr. Manikantan Vishwanathan, Chief Financial Officer, Mr. Prashant Hegde, CEO Domestic, and Mr. Atul Gupta, CEO Exports. We are also joined by Mr. Anil Jain, MD PI Health Sciences. We shall commence the call with key perspectives from Mr. Singhal. After that, we'll have Mr. Manikantan share his views on the financial performance of the company. Thereafter, the forum would be open for interactive question and answer session. Before we begin, I would like to underline that certain statements made on today's call could be forward-looking in nature, and a disclaimer to this effect has been included in the investor presentation shared with you earlier, and which is also available on the stock exchange website. I would now like to invite Mr. Singhal to share his perspectives with you. Thank you, and over to you, sir.
Yes, thank you, Siddharth. Thanks. A very good afternoon to all of you for joining the call today for our Q2 earnings 24. Over my remarks, I shall come over aspects of strategic and operating progress that we have made in the company. I am glad to report a good set of results for Q3. Let me briefly cover the highlights. PI has recorded an 18% growth in Q3 over the comparable period of last year. Our EBITDA and PAT has shown a good improvement, coming at 34% and 28% respectively. Recent times have seen industry dynamics and global geopolitical tensions, climate change, and create adverse impacts on the working pattern of AgChems. Industry, owing to its own imperatives, we have seen China offloading material in global markets. Consequently, trade channels are yet at high inventory, and the flow of products from manufacturers is therefore impaired. Certain geographies are more impacted than others internationally, but at an overall level, the generic products are the most popular on the track for declining month on month. PI has stands apart as a unique business model owing to its robustness with a differentiated portfolio of molecules in exports, a range of brands comprising the specialized products, a respect for IPR and meticulous execution, and continuous investment in innovation for being the supportive pillars to our business model. The growth you are seeing in exports for us is a result of our focus on early stage patented molecules that are still growing in many countries and obtaining registration in several others. We track the entire arc of growth from the beginning to maturity. Our track record of meeting global requirements of some of the largest products and IP holders over the years has strengthened mutual respect of the relationship we share. In fact, PI ranked among the top 3 CSM companies in the world and has truly mastered the complex operations involved. Due to the demonstrated capabilities in technology, advanced processes, our relationships with global innovators have grown very deep, both at the product sourcing level and also the process research and process innovation, where our expertise is on par. Over the years, we have supported the growth of advanced molecules of innovators, and given a pipeline we have built, the cycle continues. It is a kind of natural virtuous cycle, replenishing itself with pipeline and products and new engagements. Our domestic business is again well poised to tap potential of early stage molecules that are being launched by us as brands. Whereas in the space, we have seen subdued performance owing to monsoons deficit in the south, depleting reservoir levels, elevated inventory levels on row crops and price pressures. Our emphasis has been on driving high quality of revenue with better margins. Our superior product mix and declining working capital management has contributed very well, which again is very unique to us. We have been deploying horticulture category as well as those brands have shaped up well. creating value for farmers of fruits and vegetables across the geography. Through Jivagro, India's only horticultural specialist, we have nearly 60 brands. Biologicals and bionutrients have also grown strongly and has done well for us. We have a portfolio of 8 products. 2 have been well entrenched over 2 decades, rest in the process of development and building phase. And we continue to expand this pipeline. As we look into the future, in export, we have steadily been working towards diversifying our mix. Whereas growing is coming from molecules in the AgChem, we shall continue and shall continue to come from there. We have grown our footprint well beyond AgChems. We've established our long capabilities in the high-quality markets of electronic chemicals and other specialty chemicals. A significant growth is originating from new products. More than 50% growth during Q3 has come from here. Beyond this, we have visibility up to 5 new molecules, 50 new molecules in the R&D pipeline. The share of non-AgChem molecules in new inquiries has significantly grown by 30%. The proportion of new AgChem molecules that have a good runway grows ahead of them and reach the high commercialization on account of 30% of this commercialized going ahead. This will get commercialized in the future, with each product giving us growth curves on its maturity. Similarly, on the domestic side, our strategies are introducing novel molecules with underlying performance. We launched 5 new products in the current fiscal year. Over the last years, we have found wide acceptance and helped us mitigate the revenue decline in the industry. Our recent launch of brands has seen a healthy uptake from the insecticide, carrots in paddy, herbicide, Ketsu, a newly patented rice herbicide, fungicide, Cadet for soybean and groundnut, and the biofungicide, Pelin for grapes and chilies. We have a robust pipeline of over 20 products, both under registration development and will drive growth in the years to come. Our team is intensely working on the field to handle old farmers in the nuances of right usage of the products, thereby generating loyalty and building brand demand. Recently, our range of BioOrigins site, we are very attractive and cutting edge. We've launched a brand called AminoGrow Active, which is met a good response. Bionutrients represent a growing category of products with farming. Moving on, our strategic objective of diversifying the pharma has been achieved, and we're prioritizing the process of integration of the factors which will help of global consultants. PI Health Sciences is working towards a potent integration of CRDMO API platform, which we call CRDMO, which to deliver a comprehensive solutions to our clients. Work continues to enhance and modernize the setups, including capabilities and technological initiatives at both research and manufacturing location in India and Europe. Investments are also being made towards building a strong resource base in order to support the need for the big pharma biotech clientele, thereby intensifying the new business development pipelines. We believe the pharma business is moving in the right direction and on path to build a future growth engine for PI. Whereas I allude to this earlier in my remark, PI structure in the business is stronger owing to its initiatives of science and technology. We're truly proud of India's one of the only fully integrated AgChem company. We are the only integrated single-site research encompassing chemical synthesis, biological evaluation, process development to scale up under one roof and with a global scale and number of more than 900 people at their support. Our investments include integrated single-site center to encompass a world-class R&D setup, engaging over 800 scientists as mentioned, PhDs and 155 patents filed so far. There are a focus on unique building blocks that will give us opportunities across and lead us into newer capabilities and ultimately lead in creating new business avenues. Over the years, the attributes have translated into stronger business patterns and deep and wide pipelines of yet to be launched in the markets. Now, just an update on our belief of sustainability is a culture and rather than an obligation or passion, defined by a purpose of reimagining the India planet. PI has improved its S&P Global Score of Corporate Sustainability Assessment, ranked in the 95th percentile as a well-retained EcoVadis Gold Medal in the Sustainable Achievement with 98th percentile ranking. PI has featured in S&P Global Sustainability Yearbook for 2024, thus giving us a distinction mark amongst the best ESG companies globally. Initiatives to uphold ESG and integrate it well within the planning and operating of the business. Thus, as we grow business, we are doing so with great responsibility. We continue to actively seek and evaluate new opportunities in an organic domain in line with our strategic and operational aspirations, complement the growth that seems to our business. The outlook for the year remains positive, and we are on the path to delivery of guidance for performance of 24. This brings me to the end of my remarks. I would now like to ask Manikantan to take this forward. And once again, thank you all for joining this call today and to be a part of our growth story. So over to you, Mani.
Thank you, Mr. Singhal. Good afternoon, everyone on the call today. I'll summarize the company's financial highlights for the third quarter ended 31st December 2023. Please note that all comparisons are on a year-on-year basis and refer to the consolidated financial performance. As Mr. Singhal has shared, our performance demonstrates a differentiated approach to doing business and a sharp focus on keeping operating parameters in line with our objectives. To share the performance highlights, during Q3 FY24, we reported a revenue of rupees 18,975 million, a growth of 18% over the same period of last year. This was driven by growth in exports revenue by 23% to rupees 15,300 million and 6% decline in domestic revenue to rupees 2,665 million. Gross margin and EBITDA improved mainly on account of favorable product mix, operating leverage, and one-time impact of recovery of test material, contributing around 300 basis points improvement in EBITDA. Profit after tax increased by 28% to rupees 4,486 million, attributable to EBITDA growth and lower effective tax rate. Let me also cover YTM performance for FY24. YTM 31st December revenue was rupees 59,248 million, a growth of 20% over the same period last year. This was driven by solid growth in export revenues by 29% to rupees 48,369 million, which offset 7% decline in domestic revenues to rupees 10,979 million. Profit after tax improved by 38% to 13,120 million. Effective tax rate for YTM was 11.56% due to growth in export revenue. Cash flows from operating activities increased 16% to rupees 11,561 million and rupees 10,889 million excluding pharma. This was due to higher EBITDA and efficient working capital management. The trade working capital in terms of number of days has reduced by 10 days to 80 days compared to the previous year. Inventory levels also reduced in terms of days of sales to approximately 59 days to rupees 12,743 million. Our balance sheet further strengthened during the year. Net worth increased to rupees 84,508 million as on 31st December 2023. YTM CapEx stood at rupees 9,001 million, including pharma acquired assets of rupees 4,972 million, and is in line with our plan. Surplus cash net of debt is rupees 32,936 million as of 31st December 2023. Our balance sheet and cash flow have stood robust in line with clear financial strategy and disciplined execution, thereby enabling a superlative performance. This concludes my opening commentary. I will now request the moderator to open the forum for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Aditya Jhawar from Investec. Please go ahead.
Yeah. Hi. Thanks for the opportunity and congrats on good set of numbers, especially in this challenging environment. My first question is if you can highlight that which are the new geographies where, the product registration is still underway for pyroxasulfone? That is number one. Number second, if you can, highlight what is the pricing erosion we have seen in the markets like Australia and Argentina, where this product has become generic. Yeah.
Aditya, can you please repeat your question because your voice was not very clear?
Yes, sir. Yes, sir. So this, one of our key products, pyroxasulfone, sir, if you can highlight which are the key markets where the registration process is still on, that is number one. I'll take the number two later, sir.
Yeah, so there are many countries, but I hope you'll appreciate that it is not PI which is doing this registration. It is the innovator company, and we may not have the detailed information, but we understand that there are several countries these registrations are in process.
Sure, sir. So this, how much pricing erosion, so we have seen, we will have some market intel in markets where the product has become generic, like Australia, Argentina.
Again, to be honest, we won't have the first-hand information. I mean, the market intelligence says that it varies from 10 to 15% in the initial years. But again, this is not our first-hand information in any case.
Okay. And sir, if you would like to highlight that, you mentioned, some commentary on the capex front. So what kind of capex intensity we should expect in FY25, and what would be your guidance going into FY25, sir?
Well, lot will also depend on the progress of the pipeline, but we still maintain, 600 to 800 crore kind of, capex that we will look at for organic growth, expansion and growth.
Okay, so what about the guidance?
We will have more clarity on this, maybe by the quarter four end.
Okay, sir, for final question, that you mentioned that your visibility is reasonably strong in the near to medium term, right, sir? For growth.
Sorry, come again?
Sir, from growth perspective, so you have not spelled out FY25 guidance yet. But from a near to medium term perspective, how is the visibility on growth, sir?
Yeah, so we'll have a specific guideline again at the end of fourth quarter. But yes, as of now, we maintain our earlier, indications that we are confident of sustaining this growth momentum.
Perfect, sir. That's good to hear, sir. Thank you, sir. All the best.
Thank you. Next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah. Hi, sir. Good afternoon. Thanks and congratulations on a good set of numbers. I hope my voice is audible.
Your audio is not clear to us, Ankur.
Sir, it's better now?
Hello? Yes.
Yeah, is it better now? Yeah, thanks. Sir, thank you and, congrats on good set of numbers. My first question was on the pricing cut. Typically, historically, seeing that, across the innovator molecules or products that we have been working on, what has been the worst case pricing cut that we would have seen historically?
If you're talking about what, because we are working on both sides, on manufacturing also, we are marketing in India also, so I'm not very clear what is.
On the patented CSM side, you did alluded towards around 10 to 15% pricing cut that we have seen till now, given the product getting generic, in some of the key markets globally. Earlier experience?
I don't think this was the question. The question was that what is our market intelligence of what is the kind of price reduction has happened in one of the market where product has gone generic. There was no, I don't think the question was that what is the price cut that we have seen.
No, not you have seen. Not you have seen. The final product pricing was what I was referring to.
Yeah.
On the similar lines, historically, for any branded product, patented product turning generic, what has been the worst case pricing cut we would have seen? A broad range would be helpful.
So let me Aditya, there's nothing like worst case or best case. I mean, if you look at the industry and being in the segment, you would know this better. It's quite a standard approach of why price and volume curves play up in the industry. So there is nothing which you can really say worst case, what is worse and what is good. Again, as you know, the volume and things pick up, costs also change. So the price is determined by the scenarios in different products in different segments.
Sir, sorry to interrupt you, your voice is breaking. Ladies and gentlemen, please stay connected. The line for the management dropped. Participants, please stay connected while we rejoin the management back to the call. Ladies and gentlemen, thank you for your patience. We have the line for the management reconnected. Sir, go ahead.
Yeah, so as I was mentioning, you can look at, there is no one to say this is the way it is. There's a spectrum of price cuts, and price cuts are dependent on various. But I think you broadly mentioned what is the segment. And that's more in the end of the pipe of the sales prices. Yeah? As the innovator is the one who drives the prices in the market.
Sure, sir. Fair enough. Second question on, the growth part. While we are not guiding anything in particular this quarter, but, directionally you did mention we will maintain the growth momentum. Trying to understand from a new product ramp-up perspective, since we have been pretty, reasonably aggressive in terms of our launches over the last 2-3 years. Any of the products across agri and non-agri side, which are seeing a good ramp-up from the client perspective on the CSM side?
Yeah. So as we have also indicated that, for example, in this current quarter, there is significant growth which has been contributed by the new products. Those have been commercialized in AgChem as well as in other specialty chemical space. More than I think 60% growth has come from these products. And likewise, the remaining, the fourth quarter as well as coming year, we have a good visibility of many of these new projects contributing to the growth of the export business that we are talking.
Sure. That's helpful, sir. And lastly, if I may, on the domestic market, any timelines or thoughts, on the revival or growth uptick that you can share off? Thank you.
Prashant?
Yeah, listen. So, domestic market, we basically expect the challenges to continue in Q4 as well, because of the external conditions which we have seen at this point of time. However, our new products have really done well, even in the domestic market, both in whatever which we have seen in Q3, especially on chili and fruits and vegetables. That was the major focus crop, as well as even on wheat.
Okay, great, sir. That's it from my side. Thank you and all the best.
Thank you. Next question is from the line of Madhav Marda from Fidelity International. Please go ahead.
Hi, good afternoon. Thank you so much for your time. I had a couple of questions. The first one was, given whatever changes have happened, rather whatever slowdown we've seen in the global AgChem space, has there been any change in our engagement with our clients in terms of new products, or have you seen any clients saying that we want to go back to China now versus sourcing from the larger Indian CMO companies? Has there been any discussion of that sort?
Well, frankly, we have not seen any change in our engagement. In fact, these engagements have only gone deeper with the clients and the customers, strategic partners that we are dealing. In any case, as we explained earlier, we focus on early stage molecules, and in those kind of molecules, what is currently happening globally, the kind of headwinds that we are seeing in generics and commodities, and those are not the kind of situations that we are seeing in those molecules. And therefore, clients conveying or thinking of going back to China or to other geographies for sourcing is not the situation that we are seeing or facing. And our engagement remains at the same level, rather it is going deeper with our global partners.
Understood, got it. And my second question was a slightly more basic one, like in the pharma piece, when we talk about the kind of projects that we want to do with these biotech or big pharma customers, is it basically doing research for them at phase 1, phase 2, phase 3 kind of stage, or what kind of projects are we doing? If you could give some more sense around the business model here, it would be very helpful. Sorry, it's a very basic question, but just wanted to understand better.
Very clearly, the business model is that of a CRO, contract research services, right? Supporting early stage discovery services for innovators.
Got it. So then the growth basically comes from like sort of engaging with them at phase 1, phase 2, and then as the molecule progresses through, we scale up the business. Is that how we should think about it going ahead?
Yes. And as you know, this is a long gestation period business.
Absolutely.
Yes, that's how it starts. That takes its own time. And to remember, with PI, we're doing the same for this ag business, where we are focusing on the innovative pipeline.
Okay, got it. And anything that you can share in terms of like any specific, how many big pharma clients we're engaging with, or how many biotechs we're engaging with? Any color on the business as it stands today would be helpful.
You know, some of these are under confidential agreements, as you would understand, because it's all in the innovative space. So yes, we are working with a few, and as you would appreciate that we just started and we're building the capabilities, and then we're going to be looking to expanding our platforms for customers. Yeah.
Understood. Thank you. Thank you.
Thank you. Next question is from the line of Sumit from Kotak Securities. Please go ahead.
Yes, thank you for giving the opportunity. So my first question was relating to the one-off gains that we have seen in 3Q. So how much, quantity terms, how much was the one-off gain in 3Q?
Your audio was not at all clear to us. Can you please repeat?
Yes. I wanted to know how much was the one-off gain in the 3Q, in the recent quarter.
Okay. This was pertaining to the recovery of the theft material, and the amount was close to 70 crores. And the cost related to that was, since the cost related to that was already captured in the previous quarter, so this is the one-time gain, and this is what we have highlighted also in our communication, that close to 300 basis points of EBITDA is on account of this one-off item.
But sir, in 2Q we had mentioned that the items was lost in transit was worth 410 million. So how did we reevaluate this to 700 million?
That was cost. Because in the previous quarter we had accounted for the cost, no?
Okay.
Thank you.
Okay, sir.
The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi, sir, thanks for taking my question. Sir, on your guidance for this FY24, sir, we've earlier talked about 18 to 20% growth for the agrochem business in FY24. When I look at the numbers, we've done about 15% for the 9 months. So,
Nitin, sorry to interrupt you. The audio is not clear at all. Can you please speak through the handset?
Just give me a second. Hello, is it better?
Yes, thank you.
Sir, I was saying on the FY24 guidance, we talked about 18 to 20% growth in the agrochem business for FY24, if this is correct. For 9 months, we've done 15%. So how should we look at the full year? More towards the lower end of the guidance?
Yeah, we had indicated close to 18 to 20% kind of growth overall, okay, in the previous quarter. And obviously the domestic business, as explained earlier by Prashant, we will have to see how things pan out in the last quarter, but we are still confident, given the visibility, that we'll be able to still achieve the original guideline of 18 to 20%, and to be on a safer side, we will say that yes, on the lower end of this guideline.
And so just to make it be clear, this is only, our guidance is only for the agrochem part of the business, right?
No, I think it was for overall business.
Including the pharma piece.
Yeah.
Okay, sir. And so secondly, for the quarter on the gross margin, even if we make the adjustment for, the one-off item that you talked about, I mean, the gross margins are higher than, than the previous sort of levels. Anything has changed in this quarter for the gross margins, and how should we look at the sustainable number for this gross margins for the business?
Yeah, so we focused on product mix rather than the volume, particularly in the domestic business. Okay, where I think there was always choice of kind of chasing the volumes by looking at some liberal working capital norms and also pricing, because the price competition was there. But we always focused on quality of revenue and a positive or a favorable product mix. And that is the key contributor to this improvement in the EBITDA margin, apart from the one-off that we have seen. Even in our exports, we have seen that because of introduction of growth of new projects, as I was explaining earlier, that has also contributed in improvement in the gross margin as well as EBITDA margin. So going forward, yes, I mean, in terms of EBITDA margin, we believe that around 25-26% should be a sustainable level.
Okay, sir. Thank you so much.
Thank you. The next question is from the line of Vivek Rajamani from Morgan Stanley. Please go ahead.
Hi, sir. Thank you so much for the presentation and congratulations on a good set of numbers. Just one clarification before I ask my two questions. You'd mentioned earlier that over 60% of the growth in this quarter has come from the new products. Am I correct?
Yes.
Sure, sir. Just related to that, the first question was, would it be possible to share what the contribution of these new products would be as a percentage of your overall portfolio today? And where do you see this going, say, by the next 2 years?
Well, I'm afraid we'll not have this in front of us, but yes, this quarter's growth was more than 60% contributed by this set of products.
Sure, sir. And just one clarification here. When you say new products, that would mean the products that you've been working on, say, in the last maybe 1-2 years? Would that be a
Yeah, last 3 years.
Okay, great. And so the second question was, just in terms of the broader industry challenges that we've been seeing with respect to the acting space generally, are these new products not getting affected in a big way? Would that be a fair statement?
Yeah, that is because of the, differentiated portfolio that we have been explaining, that we are into early stage, patented molecules or proprietary molecules, which are not, I would say, mature products as of now. They are still growing. They are also getting registered in newer countries as they are growing. So it is quite natural that there is natural growth in these products year on year.
Sure, sir. Thank you very much, and all the very best.
Thank you.
Thank you. Next question is from the line of Vishnu Kumar from Avendus Spark. Please go ahead. Vishnu, may I request you to unmute your line and go ahead with the question, please? The line for the participant dropped. We'll move to the next question. The next question is from the line of S. Ramesh from Nirmal Bang. Please go ahead.
Hello, good evening, and thank you very much. So in the pharma business, you have indicated 350 million of development expenditure year to date. So can you explain what is the nature of these development expenses and what is the kind of run rate you should expect, say, in FY25 and 26? And when do you expect these to kind of, how much will that be?
Well, the development spend is in terms of our augmenting resources in R&D, in business development, in managerial, commercial areas. The development spend is also in terms of, setting up new systems and processes wherever there is a scope, which we have found during the integration of these different, acquired assets. The development spend is also towards a lot of, infrastructure improvement that we have made or we are making right now. So this is broadly the nature of the development spend. Now, specifically what will happen in 25, 26, we are still in the process of, kind of consolidating and also completing this integration process. Maybe in next couple of quarters is the time that we will have more clarity and also clear visibility of, scale up of this newly acquired businesses.
Yeah. Okay. So on the balance sheet details you have given and the pharma assets and liabilities, can you share the current assets and current liabilities in pharma, if it's possible?
Yeah, that we can share maybe on the sideline. These are numbers that you can always get from our team, finance team.
Yeah. So in terms of the pharma business, there is improvement in terms of your revenue and your, if you adjust for the Ind AS, there's improvement in the EBITDA, and before development expenditure, EBITDA margins are 16%. So how do you see the revenue run rate over the next 3 to 4 quarters? And before development expenditure, what is the kind of EBITDA margin you would expect, say, by end of FY25 and 26?
No, that's what I explained, that while we can certainly, give you some answer, but you will have, rather we will also have a much better visibility of this scale up and, improvements coming through in next couple of quarters. So maybe by end of next quarter, we will have a much better visibility of what is the revenue scale up and the margin profile that we should be targeting. But just to answer your question in broad terms, as we have also indicated in past, that eventually post this, development phase of couple of years, we would surely expect the EBITDA margins, etc., to be on the similar lines as what we see today in PI.
Okay. So one last thought on the CSM business. So this entire 800-900 crores of capex will be on CSM. So while you have in the past said you should not possibly look at the asset turn, but where are these investments going in terms of developing your capabilities? And eventually, what is the kind of incremental growth in revenue one can expect based on this sort of capex over the next 2 years?
Yeah, so the capex, organic growth capex is mainly going into capacity expansion and also some of these new technologies, capability building that we are, investing in R&D and kilo pilot and all that. The kind of potential is the similar. The asset turns, as you see today, are more than 2.25. So we would surely expect similar kind of asset turns to continue in future as well for this business.
Okay. Thank you very much. I'll join back the queue. Thank you and all the best.
Thank you.
Next question is from the line of Amanat from Ministry of Finance of Oman. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yeah. Sir, I just wanted to have a clarification on those news items which came to the entire media a month and a half back, relating to some competition in the China is building up huge capacity for the product which you are mainly dealing in, and also your major client somewhere in Japan is given a guidance of very lower growth of their final output for which you are supplying the input. Any comment or clarification you would like to give, because you might have seen this one particular news has impacted your share price quite vigorously. If you wanted to give certain clarification that how you see these news items impacting your business, it will be helpful for the entire investment community.
Sure. In fact, we had given a clarification to this news item, if you recall, immediately after that news came. Okay, but I'll again, for the interest of the investment community and analysts, I'll again repeat. So yes, as we know that in this industry, products will eventually go generic. Okay, and same way, this particular product in subject is also surely go generic. The solo product, the patent is already expired in few countries, and in other major countries, it will expire in next few years. Okay, the product will go off patent in next few years. But the important point to understand here is that in most of the developed countries, ultimately the product which is being sold in the market is the formulation, the combination formulation products. And most of these combination products have a significantly longer patent life than next few years. Okay, so while the solo product, the AI product patent will expire say in next few years, the formulations and the combination formulations, their patent life will be there for next several years after that. And therefore, the impact of the product genericization, while it will be there in the countries the product has gone generic or will go generic in next few years, but in the major markets, because of the patent protection of these combinations and formulations, the impact is not going to be as significant as was articulated in that news item. This is the first point. The second point is that this news item also articulated about the capacity build-up which is happening in China with some of these companies, etc. Again, this is another point that, we have always heard this news about capacity, but again, there is certainly going to be a timeline of capacity building. And since the market opportunity for the generic would be limited because of the first point that I explained, we will have to also see that eventually what is the kind of capacity which will come in play in next several years. The third important point for us to also appreciate is that while yes, products go generic or off patent and many generic players come, but this is also true that when products go generic and many players come, the market also grows, the ultimate market. Okay? And this particular molecule that we are talking is into certain segments which is a multi-billion-dollar segment, and this molecule is still 600-700 million. So the limited point is that there is huge potential for growth as we believe is there for this molecule in years to come, even when there will be generic competition. And we being one of the major supplier, manufacturer for last now almost 8-9 years, we strongly believe that there will be a very strong position that we as a company will have. Okay, so that is the fourth point. The fifth, another very important point for us and also the analysts and investors to appreciate is that PI is not one product or one molecule company. Okay, as we have already explained few times that PI is a company with a diversified portfolio when you talk about our domestic business as well as our export business. In export today we have more than 22 products. Every year 5 to 6 products are getting commercialized, and these products are now driving growth, for the business and the company. Even in this quarter, more than 60% is contributed by some of these new projects which were commercialized in last 2-3 years. And going forward also, the growth will be driven by many of these newly commercialized projects, and many of them are actually non-AgChem projects. So with our diversified portfolio, we are confident that this whole revenue risk or the margin risk which was articulated in that news item is not, it's a bit exaggeration of the real risk that we see. I hope this answers your question.
Yeah, thank you very much for this elaborative answer. It's very, very helpful. Now the things are quite clear. So my second question is respect to your diversification towards this pharma business. As your results show that the growth is quite robust. Just to get an idea, how quickly you have a plan to make this pharma business quite a bigger part of the total revenue pie. So at the moment it is quite small. Without going to the very detailed guidance which you may not be able to give, just to give an idea, this diversification drive which you just started few years back, how quickly it could gauge a momentum to make certain material difference at your profitability level.
Right, that this drive of diversification we have been working for some time. Okay, in our exports, as we were explaining earlier, that already close to 30 to 35% of our new inquiries and new projects that we are commercializing are coming from non-AgChem space. This is the diversification we are talking, and on top of it, this pharma diversification will also add to our overall diversification and kind of balancing the overall business segmentation and business growth. Our aspiration is that next 4-5 years, more than 20 to 25% of our company's revenue should be from non-AgChem space, which includes our pharma as well as our portfolio of non-AgChem in our CSM export. So that is our objective, and we are progressing in that direction. So far, we have a good confidence the way we are progressing. But yeah, this is the overall objective we have.
So this 20-25% contribution by how many years, sir? 3 years, 4 years?
4 to 5 years, as I said.
4 to 5 years. So the last one, a little smaller part. Because of this Red Sea related problem and the shipping disturbance which is happening, are your company getting impacted due to this happening, which can creating problem for the transportation and exporting to the US site?
So there is certainly some impact in some of the shipments to Europe and US. Yes, there is some impact. And accordingly, the supplies are being planned, the costs are being, obviously costs have increased in some of these shipments, which have also been discussed and accordingly shared with our customers. But yes, short answer is there is certainly some impact.
So the incremental costs relating to this, will you be able to pass on to the customer, or it will add on to your expenditure?
No, in most cases, this will be passed on because this is the general understanding we have with our customers.
Okay. Thank you very much, sir.
Thank you.
Thank you. Next question is from the line of Rohit Nagraj from Centrum Broking Limited. Please go ahead.
Yeah, thanks for the opportunity and congrats on good set of numbers. So first question is, generally I understand that we have calendar year contracts. So when we had our negotiations during the last few months, how has been the mood from the global agrochem players in terms of the volume lift up for this calendar year? So are there any delays that we are experiencing or they are still in wait and watch mood? Any comments on that? Thank you.
Well, that varies from product to product, but in general, I would say we have not seen any significant change. The kind of products that we are working and operating with our global customers, we have seen a good momentum and effort on concluding, finalizing the businesses for next campaigns or next year.
Sure, got that. And the second question is on pharma bit. There are three sub questions. One is the one-time development expenditure. Is it over or will it continue? The second thing is in terms of the EBITDA and EBIT difference. It seems that there will be interest cost. So how do we justify, given that we have cash on our books, why this interest is being paid? And the third thing is, we have also shown the segmental results for last year, same quarter. So what was the pharma segment during that time? Thank you.
So regarding your first question, yeah, development spend may continue for maybe a quarter or so, because we are still in the process of, trying to optimize things and, also coming out of the integration process, whatever changes, improvements that we are seeing. So yes, that process will continue for next 1 or 2 quarters. Regarding your second question, I think it would be good if you connect with our finance team on these, finance line items of that would be good. What was your third question, please?
Sir, last year, same quarter also we have given the bifurcation in terms of segmental data. So last year, I understand we did not have pharma. So what this particular negative EBIT is particularly we're talking about?
So last year, third quarter, we had no pharma. So that is the reason that the impact that we have seen this year, and we have already conveyed that how much is the growth of, if you see our communication investment presentation, investor presentation, there we have already indicated that how much is close to 10% is coming from, pharma exports and the rest 13% is coming from our XMS.
Sure. Thanks a lot, sir, and best of luck. Thank you.
Thank you.
Thank you. Next question is from line of Vishnu Kumar from Avendus Spark. Please go ahead.
Thanks for time, sir. Sir, over the last 3 years, we've more or less doubled our CSM with limited capex. Annualizing, 300-400 crores. Going forward, as we look for a similar run rate of growth, is this the capex similar numbers or we have maxed out wherever efficiencies can, and we need to probably invest a bit more capex? Just some understanding on this.
I'm not too sure on your number of 300-400 crores. I think it would have been more because, what happens that there is always a lead and lag in capex investment and the revenue coming out of it. So whatever revenue growth that you would have seen in last few years has also come from the investment or capex that we would have made maybe 2 years back. And I recall that we made a significant investment in 2-3 years, earlier 2 years. Okay. But Having said so, yes, I mean, there were a lot of initiatives that we had taken to improve the throughput of the existing facilities on a continuous basis. I think in last couple of years, every year, 10 to 15% capacity enhancement we have made through improvements in our capacity throughput. Going forward also, as I was indicating to the earlier participant, we anticipate 600 to 800 or 800, close to 800 odd crore kind of capex every year to keep investing or in enhancement of capacity, while we would surely be working on further throughput improvement. Some of these technologies such as flow chemistry, etc., we are already kind of commercializing few projects, and I believe that will also help us further improve our overall, asset terms in this business. Maybe Atul, you may want to add something to what I have already said.
Yeah. So I think the major focus is on the investment in the technologies in coming years. And of course, we have been continuously working on our capacity utilization of our existing assets by way of improving the efficiency plan, and that's where 10 to 15% capacity is being improved every year basis.
Understood, sir. Sir, on one of the previous participant question on margin, you highlighted that we probably settle around 25-26 on EBITDA margin. This quarter, if you look at the gross margins, there seems to be some significant improvement on the gross margins. And obviously, our overhead investments is probably led to a slightly muted or slightly lower EBITDA as compared to what the gross margin is. So looking ahead, when you say 25-26, you expect some pricing cuts from the customers as you go forward in the next year, or the investments and overheads will keep you at 25-26? Because optically, it looks like probably this number can be even more at the current gross level.
Nothing. I mean, we don't, kind of anticipate any cuts or something, but, it is also to do with product mix. It is also to do with development spend that we believe we would be making not only into pharma space, but even in agri-input space, these new verticals that we are building, such as biologicals and others. So, yes, I mean, I would say it would be good to kind of assume 25-26% rather than be quite speculative basis 1 quarter or 6 months kind of results.
Understood, sir. And just one final question on the tax rate guidance, if you can give for this year and next year. I mean, next year also.
Money?
Yeah. This year will be around 14 to 15% for the year, kind of thing. Next year we have the working on the thing. Maybe similar range, but we need to confirm that. Maybe next quarter we'll confirm.
Sir, whether this 25% normative rate, when would probably be having the delta from 14 to 15? Will you catch up over the next 2-3 years, or this 14-15 will continue for at least couple of years?
It will continue at least for 1 more year, but as I said, we need to confirm that with the other computations.
Got it, sir. Thank you.
Thank you very much. Ladies and gentlemen, that was the last question for today. I'll now hand the conference over to the management for closing comments.
Thank you, gentlemen, for joining on this call. We really appreciate your interest and your support in this growth journey of PI. Thank you so much, and have a good day. Bye-bye.
Thank you very much.
Thank you.
On behalf of PI Industries Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.